I think specifically in terms of emerging markets, though, obviously China is in a pretty tough place from a competitiveness perspective and diminishing access to markets. I mean, obviously
Yes.
their trade routes have changed a lot over the last sort of 3-5 years as well.
Fergus, that's interesting, and just shed some light on why the Leaders Fund is an ex-China fund. Isn't there deep value that's emerging in China?
Yeah, I think it's hard to argue there isn't deep value. That's definitely the case. I would say, however, that when we look at the domestic economy and just kind of stepping back from markets for a second, the stimulus measures are broadly disappointing. Obviously, you had a rally in 2024, but there's a huge amount of burden of the similar issues. These are issues we've been talking about now for however long. This is leverage, excess capacity, incrementally weak returns on capital, and there are also some really thorny policy issues and contradictions for Xi to address. So, he wants to stabilize the property market, but he's not really dealing aggressively with underwriting the whole sector in the way that, the TARP policy did in the US in 2008 and 9. He wants to grow this consumer base and transform into a consumer economy, but at the same time, the Chinese definitely don't want to lose their manufacturing kind of leadership and dominance globally. And then also, he wants to revive animal spirits. And we just saw the headlines about companies buying back stock and insurance companies buying stock. But he isn't necessarily seemingly committed to a wealthy kind of stock investing middle class, which would obviously be subject to a more volatile market moves and also obviously, perhaps even worse, ultimately challenge the CCP. So that's the macro issues, and we don't necessarily see these as being resolved easily at the moment.
Hey, Fergus, Martin here. Great to see you and a pleasure having you on the show. So conspicuous by its absence in your holdings as an EM guy, not just China, but I note here also Vietnam. And is this on the thinking that, Vietnam has been, yes, a part of one, it's also been sort of a re-exporter, as you term it. And I guess the worry is from the U.S. perspective, it's like, okay, I see the ships coming from Vietnam, but the stuff, everything originates in China.
Yeah, for sure. I think when you look around the world, it's a really mixed picture from a tariff impact on other EMs, non-Chinese EMs. And yeah, you're absolutely right. We've heard them called bridges and buffers, and I think Trump is going to potentially hit the bridges pretty hard, and the re-exporters like Vietnam in particular, and there are other countries doing similar kind of work for them. We don't own anything in Vietnam. I wouldn't say it's necessarily for that reason, but we just haven't pulled the trigger on any particular securities there in the last couple of years. Instead, I think we really prefer those China plus one countries from a top-down perspective. I mean, Mexico, to be honest, stands out despite a huge amount of noise, and we wait for February the 1st, right? But Mexico remains crucial for U.S. industry and consumers, and we know that tariffs are inflationary, and if Trump wants to kind of keep a hold on rates and keep inflation down in the U.S., and we've read a lot about how inflationary and GDP negative tariffs could be. I think Mexico is a key partner there. I'd also call out India as a key substitute market. They're exporting a huge amount of kind of value-add medical devices and the like already to the US. And then we'd also say, the traditional partners, South Korea, Taiwan, directly plugged into the supply chain, particularly around AI and, renewable energy, grid technology, the kind of widgets that are absolutely essential for the new US economy.